StockTip. Best stock setups.
Welcome. This is StockTip's daily update. I'm Marcel Todia. So, we are going to start today with the general trend of the markets. As you've seen, the markets are momentarily in the correction phase. This is the third consecutive day with huge volume on the downside, and that's why I think the main strategy for us today and the next few days is going to be cash. Cash, although many will not see it this way, is a huge position, is probably the best position in such times like this, and that's the position to be held by swing traders, especially by swing traders. So position traders who have um, uh, have a little smaller positions, I think they can they should just pull their stops a little tighter, but should also not be engaging in any long positions anymore. They should just they should just be staying on the sidelines and wait patiently for the market to turn around. For swing traders, I think swing traders are going to be affected if they aren't going to stay in cash. Definitely don't. I wouldn't dare opening any long trades, any long swings at the moment. I think that is the main strategy. Except here and there, if you definitely can't let a pullback, breakout, or a good setup pass, then yes, one or two examples, one or two exceptions. But if you engage in too much action now, I think you're going to see your portfolio taking a big hit, and you're going to lose everything you've reached. For example, from this point to here. So here we had 5.8%, and here you can see we are already at 3%. Another 1 or 2 days like this, and hoopala, all the money is gone just in a couple of days, as in here you had a couple of weeks. So cash is often underestimated, but is the best position in such phases like this one. So we are going to see SPY. SPY also had a huge volume yesterday, but we've seen a little pressure from the bullish side. All in all, we've finished the day underneath at the low from yesterday, so from the day before, so we didn't get much pull. The good thing is we've reached this I will delete, but we've reached the 50-day moving average, and here and here and here and here the 50-day moving average worked like a spring, but sadly the last two times we've reached the 50-day moving average, we've cut through it like butter. So if it's going to hold today, it remains to be seen, but I wouldn't expect too much from it. I think the general direction of the market is going to be given from the technology sector, and the Nasdaq is the one who caused this mini crash or correction. And if the Nasdaq is going to pull together, then I think all of the indexes are going to come in line. If the Nasdaq is going to keep falling, then the whole markets are going to be pulled with it. So the Nasdaq also tried to make a little bounce yesterday, and we've reached a couple of imaginary support lines. So you see here underneath is the trend support, this trend canal. we have reached the support line, but not quite yet. Not quite yet. We may still see another day. And on the other side, we haven't reached the lowest lows from the last corrections. So uh, this may be a bounce, this may be a small bounce, but without an outside reversal, I don't see it much power here. It may be, the thing of the matter is, no one can tell us in which direction the market is going to move. There aren't any fortune tellers here with us, so I think the best way to handle this is to just wait and see what happens. You aren't going to lose that much if you wait to see. You don't have to be right there when the market starts, when the market turns. You don't have to be there. It's fine to say you can take the next ride by the next consolidation. So we've had a turning point here, then we've had another pullback, and only after that we've had the next turning point, and this was a healthy move. So if you look at it, you you may find yourself in the similar situation like this one here. You may be tempted to say, no, I'm going in again, the market is going to turn, but then you get another day and another day of sideways movement, and then another day of sideways movement, and then a couple of one up day, and then 3 down days. And this is generally where you destroy your winnings. So that's not something that I would recommend. I would say wait if you see a definite outside reversal here, like we had I think this I think this you may call this one a small outside reversal here, a little underneath the last low here. So if you see such an outside reversal like we did here, then that's a buy. I also bought myself in there. But without a good setup, without a good outside reversal, at the least, or a couple of consolidation days, and then a breakout out of this consolidation, then I think it's a little too risky. And like I've said, the best thing to do is probably just stay cash, stay on the sidelines, and then to your watch list, because like the pieces that are going to resist this correction, that are handling the correction good, these are the titles that you want to buy when the correction ends. These are the most powerful and secure titles, and then when the correction ends, if you still have your setups and your watch list ready, then that's the moment you want to really hit it hard. The Russells, so the small caps, um, also didn't do anything, and here I come again and say, don't try too much. This is the time where less is more. Less is more is a good rule. You have to, it doesn't matter if the trades are going well or the trades are going bad momentarily. You shouldn't try that much. You should be happy with the fact that you've managed to get out of the falling market at the right time, like here. Um, or if you take a look at Tesla, we I was happy to get off this trade here. I took some winnings here. I wished it would go further, but I took some winnings here, and then I set my stop here, and take a look at it. Had I not stopped this trade here, I would have lost another 10%. So secure your just secure your profits. that's the main thing to do. You don't have to make any more profits. You don't have to make profits in absolutely any phase of the market. It's very, very good when you manage to to really take care of the trades you did and to get out of a dangerous situation. That's something you should be proud of, and that's something you should concentrate on, and not exactly always opening new trades. Unless, of course, these are a few exceptions, so one or two trades there, but also this may also be very, very dangerous. So if you are doing this, then be advised, um, try to make a small position with a minimal risk, and don't hold on to it if it doesn't go your way. Like here, like Tesla, if you hold on to it, then you make another 10% in minus, and then you're suddenly in water and drowning. No one can save you there. Back to the Russells. Here, you also see here you have no general direction yet. No general direction. You have to wait and see what the market does. If the market's going to turn, it may turn here, or it may you may see a bounce for the next 1 2 days, and then again another downside. So another move on the downside, and the next stop would be then 350. So from 350 to here, you would from here to 350, you would lose another 8%. So we don't have any idea where the market is going. It would be nice to see a nice bounce here, but I think, I repeat, the best thing to do is probably to just be patient and let the market show us. Um, and I don't want to be hypocritical. I've said a few exceptions. We're going to talk about the trades that I've made yesterday. So I've opened two positions here, IDXX, a very, very small position. And I've opened this because we found ourselves on an inflection point here. We are 1, 2, 3, 4, 5 days down, and in these 5 days we've made minus 13.5%. There was no consolidation, and we've hit yet two support levels. So I've bought. I'm now with a very small position long, which I've bought here. So this is my risk. It's a small risk. If it's not going to hold, then it's not going to hold. But I've seen this like an outside reversal. We've crossed the support lines, and then we've got over it again. And after such a fall, I think it's something reasonable to do to try to make some money with a bounce. And I think that the target would be here in the a reach of 608 or somewhere. And and this is what happens. The day before, I was complaining that I didn't, or the days before, that I didn't see the breakout in TSM in this weekly chart. And I was a little upset about it, but I've told you, don't hold on to it. Don't try to make any every setup and to meet every setup, and especially don't try to run after it. In 50% of all of all breakouts, you get a pullback, and even then you don't get a breakout out of every pullback. So in this case, I was patient, and we've got ourselves a nice pullback. You can see here a very nice pullback, to the support line, and then a breakout again. So I've bought it about, I don't know, about here somewhere, and then surprise, surprise, we are now here. And in the daily chart, it looks pretty damn good. And in the weekly chart, we are still above the breakout point with a huge volume. So it still looks pretty good, and this is going on, although the other markets are experiencing correction now. So I'm pretty happy with this position trade, but this is going to be handled as a position trade. That means small position, a relative small position, and you've seen the risk is limited. The risk, our stop is one so 124.5 or somewhere in this region. So I am pretty proud about this trade, and with the markets sorry, with the markets going the way they are, I've dared another a short this time around, a short in Apple, because Apple is hanging in a limbo right now, and Apple has I think 11% weighting in the Nasdaq. So if Apple falls, it could also pull the whole of the Nasdaq with it. 11% is a huge percentage, and from the S&P 500, 6%. And like you see here, Apple is momentarily in a limbo. The next supports are both here, the 50-day moving average and the last pivot here. This I can delete, and I've bought this position here. So underneath 172, this was my trigger, with a stop here. No, higher. One something like that. I think 174 was my stop. I don't know. Again, I don't know. Everything is going to go in the general direction. I don't think one stock is going to resist the general direction. But if it's still going the way I hope it's going, then this is our risk, and this is our margin of profit. So 2.5 to 1, and that's pretty good considering the markets were still falling the last time I have looked. So this is a small short that I've tried. Going to add it here. Going to see what happens, and I have to come and say all of these three trades that I've tried are with very low risk. So I think I've risked about 0.2% portfolio with a trade like this, if not less. So even if they don't go our way, then it's still not the end of the world. But I see this one going. And this is a gamble. This is a light gamble, I will give you that. But this one is 0.1%, and Apple X, whatever. And Apple, we shall see. Typed it right. Apple, we shall see. So the setups, some of the setups have held. This is the top list. Box is gone. CDV. CDV is still looking very healthy. That's why it's still here. CSX looking healthy. You can see here it's looking really healthy, and it's in the it's under support, and 90 moving average support and underneath the resistance, so it's looking pretty good. CT XS is not looking that good anymore, but it's still a healthy setup. Ever still looking good. Facebook would be something for a position trader now, and that doesn't look too good also. So I think Facebook is gone from the top list. Micron Technology is looking good, and Qualcomm for a position trade is the best setup perhaps. So that's it. Thanks for joining, and remember that I would say cash is king at the moment, and just sit patiently and wait. Wait for the market to give us the tempo. You don't have to be ahead of the market. Just wait and see what happens, and if it happens. And if it happens, then good. We are going to join in on the action, but we don't have to get get ahead of ourselves. So StockTip is going to be online soon. Till then, you can enjoy this content on YouTube for free. Thanks for joining, and remember to like and subscribe. If you have any suggestions, write them down in the commentaries. And have a nice day, and feel success. Bye.